Okay, so today I'm going to show you the sweep options for your brokerage account or settlement account options. And you may be surprised at how low your broker is paying compared to other brokers. So I was a little bit shocked. I think a lot of brokers are stuck in the past and they're not used to this changing interest rate environment that we have right now. So I've got one, two, three, four, five, six brokers that I looked at. All of the cash sweep options. So when you buy or sell a stock or ETF, or you deposit money in the account, usually it'll sit in the settlement account or a cash account, and it's either drawing no interest or it's making a small percentage. And depending on those options, it could vary from anywhere from like 0.01% up to 3.71%. And some of those options are automatic, some of them are not automatic. So we're going to start with the worst one right now, which is eTrade. And that, unfortunately, that's where I have the bulk of my money. So I've been trying desperately to get the savings account, which is 3 point something percent set up. And my application has kind of fallen into a black hole. So I haven't received any emails back, and it's been about 2 weeks. And the most locked down of all the brokers with your invested cash for settlement is eTrade. And I'll show you why here in a second. So if you look here where it says options for your uninvested cash, this is the eTrade website. Cash management. See all of the cash management rates. That's what's the options below. Now, when eTrade was acquired by Morgan Stanley like a year or two ago, they used to have some legacy options, which were higher interest rate. These options aren't available anymore. So this was like this JP Morgan government bond, government money market was like 3 point something percent. It's not available anymore. It has to be like a managed account or some old account. So these are the options. If you have a brokerage account, you have two options. You have the cash balance program, which is anywhere from 0.01 to 0.15%. And you have the extended insurance sweep deposit account, which is 0.01 to 0.15%. You would get 0.15% if you have $1 million or more. Those are your only options. I looked to see if they had any mutual fund options you could buy. I didn't see anything that was easy. I tried to do most of these money market funds they're not ETFs, they're mutual funds. So when you go to plug in the ticker symbol to buy, it's usually like $1,000 minimum or a $3,000 minimum, and it says not available when you try it on eTrade. So that's a no-go. So the second option that we have was TD Ameritrade. Okay, here you can see the TD Ameritrade cash sweep interest rates. So they have a bunch of different options, but they're all 0.30%. So FDIC, all these options, 0.30. And I don't see any options to do anything else. So maybe there's a way you can buy a mutual fund or something else, but they don't make it clear what an easy option for you. So that was the second worst one. The next worst one is probably Schwab or Robinhood. So Robinhood, the data seems to be a little bit out of date. It says here you'll earn 1.5% annual percentage yield on your uninvested brokerage cash that is swept into the banks in our program, or 3.75% for Robinhood Gold members. That's a paid service. I think it's like $3 or $5 a month. So if you're just a regular customer that's not paying the extra money, it's 1.5%. So that's a little bit on the low side. And when I looked up the data here, it says, could the interest rate change? It said this is as 1.5% as of August 11th. So, I mean, I couldn't find any other place on the website to look. I mean, It's, you know, it's not August 11th anymore. It's past that. So you would think they should update it. But anyways, that's probably the third worst. The next one is probably Schwab. But Schwab gives you a lot of options. So I have a Schwab account that I signed up with where they gave me like $150 free. And I believe they automatically have it invested in this 0.40%. So it says here, uninvested cash in your Schwab brokerage account. I think by default it goes to this account, or you can have it linked to the checking account, which is pretty much the same rate. But there's some other options. So that's a little bit on the low side, but they do have, you could actually purchase, they have the high yield savings account, that gives you slightly more. Now I think that takes, you would actually have to manually transfer it into that. I don't think there's like a drop down where you could just automatically set it for that. The same goes with these purchase money market mutual funds. They don't give you an option to automatically have it invested in this like Fidelity and Vanguard do for theirs. So you actually have to physically buy. So if you've got $5,000 that in your account from dividends or deposits or buyout, you know, when a company buys another company for cash, you have to actually go and manually buy their mutual fund. However, the nice thing about it is they don't set a minimum. So most mutual funds have a minimum of like $1,000. They have a lot of options here. So here you can see all the money market funds that they have available. They have, you can see the 7-day yield. There's a value advantage fund. This is the ticker symbol, 3.7% yield, no minimum investment. There's a government and treasury money market fund, 3.4%. So you could just hit buy when you log into Vanguard. Buy, you know, $50, $60, $100, $1,000. That's the nice thing about it. You have a lot of options here. 3.4% for this one, 3.2. It is a little bit of a hassle. I mean, it's not automatic like Fidelity or Vanguard, but you can see there's a lot of options. You have tax exempt funds. They're all in the 3-point-something%. Here's the thing that they mentioned that's what kind of explains this. So Schwab has eliminated sweep money market funds as a cash feature for most new and existing accounts. Limited accounts and account types may be eligible to have a money market fund as a designated cash feature. So that basically means you can't buy it automatically. You're going to have to do the work yourself. So that's the kind of a bummer on that part. So from what I could tell, it's by default it's 0.40% if you don't do anything. If you manually buy them, it's 0.3, 0.7. So then if you want to actually buy a stock and you've got it tied up in a mutual fund, you have to sell the mutual fund. And you know, it's been a long time since I've bought mutual funds, so I'm not sure the availability, how quickly you could sell a mutual fund if it's going to take, you know, a whole day or so. But they do give you some options, so it's not the worst thing in the world. Fidelity, I just signed up with their cash management account, which was like 1.58%. They do have an option where you can move money into from the brokerage account, I think, to the cash management account, but it's not an automatic thing, so you have to manually do it. But they have two options from the drop down in their brokerage account, and they both have pretty good rates. It's anywhere from 1.58 to 3.37%. So the Fidelity Treasury Money Market account, I think I have set up right now with mine. There's a drop down that you select what you want to do with your uninvested cash, and that's where mine is parked right now. And this is actually a 2.74% yield right here. And The second option you have is a Fidelity Government Money Market Fund. And the annual percentage yield on that is 3.32%, or 3.37, depending on how you want to look at it. So the nice thing about that is it's automatic. And I didn't look at the options. You may be able to buy mutual funds also if you're not happy with those options. I know they have a lot of iShares mutual funds, and I'm not sure if they eliminate the minimum investment amount on those to do that. So the next one I have is Vanguard. Vanguard is pretty good also. It's 2.6% to 3.67. The 2.6% is called the cash account, and it's only available to, like a beta group. It's new investors. So when I tried clicking on it, it wasn't available. It said closed to new investors, but it doesn't matter anyways, because the current Vanguard Federal Money Market Fund pays a higher yield. It pays 3.67% anyways. So that's a better deal. And this, you can have it set up automatically where it'll invest the cash into it automatically. So that's a good thing. So these are the accounts that I looked at. I know there's some other brokers like Ally, and I just picked some of the big ones that are established. You may want to look at some of the other options and consider switching. I'm thinking of moving money out of eTrade since they're paying such a low amount and my savings account hasn't been opened up. I don't know what happened to the application, but you have to do everything you can. Inflation's getting higher, and who knows how high it can get. Maybe it's going to get up to 20%, and the interest rates will keep going up through 2023. We don't know. So it's a good time to start planning for the changes. So anyways, that's my video for today. I hope you like it. Give me a thumbs up, comment, and maybe comment if you have a better way of dealing with this sort of idle cash. You can reinvest dividends, you can do that stuff, but is there something else that you guys do that you think is a better option than what I'm suggesting here? So feel free to comment below the video, like and subscribe. Okay, have a good one.